In school, you learn history, math, and science, but almost never how to manage your own money. Personal finance is a life skill everyone needs, but most never get taught. This leaves young adults unprepared for real-world money decisions. Without financial literacy, you risk debt, stress, and missed opportunities, but you can change that starting now. This is your first lesson in personal finance. Let's get started. School teaches you some money basics. Percentages in math, supply and demand in economics. But it rarely brings it down to your personal life. You learn about the national economy, not your own. The gap between what's taught and what's needed is massive. You need to know how to budget, build credit, save for emergencies, and harness compound interest. These are the basics of financial literacy. We're here to fill in those gaps and give you the tools school left out. What is the single most important concept in personal finance? It's not about complex investment strategies or chasing the hottest stock tip. It's something far more fundamental, something that underpins all successful wealth-building endeavors. It's understanding the crucial difference between an asset and a liability. This distinction is the bedrock upon which financial success is built. Grasping this concept will change the way you view money and your financial decisions forever. Simply put, an asset puts money in your pocket. It's something that generates income, whether it's through interest, dividends, rent, or capital appreciation. Think of it as a financial workhorse, constantly adding to your wealth. Conversely, a liability takes money out of your pocket. It's an expense, a debt, or something that costs you money on a regular basis. Liabilities drain your resources and hinder your progress towards financial freedom. The rich understand this fundamental principle and consistently focus on acquiring assets. They prioritize investments that generate income and build wealth over time. Unfortunately, most people unknowingly collect liabilities, often mistaking them for assets. They accumulate debt, purchase depreciating items, and wonder why they never seem to get ahead financially. For example, a stock that pays dividends, providing you with regular income, or a rental property that generates positive cash flow is undoubtedly an asset. These investments contribute to your financial well-being. On the other hand, a car loan, with its monthly payments and depreciating value, or an unused subscription that you continue to pay for, is clearly a liability, draining your bank account each month. Even a house, while often considered an investment if you live in it, it's primarily a liability. Money flows out in the form of mortgage payments, property taxes, and maintenance costs. However, if you rent it out for profit, generating positive cash flow after expenses, it transforms into an asset. Therefore, the ultimate goal is to strategically acquire more assets and diligently minimize liabilities. This is the path to building lasting wealth. Remember, every dollar you earn presents a choice. You can use it to buy a liability that will cost you money, or you can invest it in an income-producing asset that will generate wealth. This doesn't mean you can't enjoy life and indulge in occasional luxuries. It's about balance and conscious spending. But prioritize building assets first. Make it a habit to invest a portion of your income before you spend it on non-essential items. The key is to let your assets eventually pay for your wants. This is the essence of financial freedom. For example, instead of taking money directly from your paycheck, buy an asset that generates enough income to comfortably cover your car payment. This way, your asset is essentially paying for your car instead of using your hard-earned paycheck. Embracing this mindset shift, focusing on assets over liabilities, is the very foundation upon which you can build long-term wealth and achieve lasting financial success. Debt isn't good or bad, it's a tool. Used wisely, it builds wealth. Used carelessly, it destroys it. Bad debt buys things that lose value, like credit card purchases or expensive cars. It makes you poorer and traps you in a cycle. Good debt helps you acquire assets, like a student loan for a valuable degree or a mortgage on a profitable rental property. The rule: be the master, not the slave. Ask, will this debt make me wealthier in the long run? For bad debt, pay off your credit card in full every month. For good debt, do your homework. Make sure the reward outweighs the risk. Used right, debt can accelerate your path to wealth. Used wrong, it will ruin it. Compound interest is your financial superpower, the force that grows your money exponentially over time. It's interest on your investment, plus interest on the interest you've already earned. For example, invest $1,000 at 10%. Year 1, $1,100. Year 2, $1,210. It snowballs. The secret ingredients: time and consistency. Start investing early, even small amounts, and let compounding work its magic. Consider two people. One starts investing at 20, the other at 30. The early starter ends up with much more even if they invest the same amount monthly. Every dollar you spend today isn't just a dollar, it's the hundreds it could become if invested. This isn't about deprivation but understanding the true cost of spending. Harness compound interest and you're on the surest path to financial freedom. Without a budget, your money controls you. With one, you control your money. A budget isn't a prison, it's a plan for freedom. It's as simple as tracking your income and expenses. Know exactly how much you make and where every dollar goes. Track your spending for a month. Every coffee, every ride, every subscription. Categorize your expenses, needs, wants, savings. Use the 50-30-20 rule: 50% to needs, 30% to wants, 20% to savings and debt repayment. The golden rule: pay yourself first. Move your savings into a separate account as soon as you get paid. Don't wait to see what's left, there never is. By paying yourself first, you prioritize your future and can enjoy the rest guilt-free. A budget isn't about restriction, it's about being intentional with your money. Investing is putting your money to work so it grows. It's not just for experts or the wealthy, anyone can start, even with small amounts. The easiest way? Low-cost index funds or ETFs. An index fund lets you own a piece of hundreds of top companies at once, reducing risk. Historically, the market goes up over time, so passive investing is a smart, proven strategy. Open an account, like a Roth IRA, with a reputable brokerage. Many have no minimums. Automate monthly transfers and invest in a low-cost index fund. Then leave it alone. Let time and compounding do the work. Two key concepts: taxes and passive income. Taxes are a part of earning money. Learn the basics to avoid costly mistakes. Income tax is the first you'll face. Fill out your W-4, file a return, and know about deductions and credits to save money. Now, passive income: money you earn without trading time for it. It's the ultimate goal. Income from assets like stocks, real estate, or businesses that run without you. Dividends, rental income, royalties. These streams take work to build, but they buy you freedom. Focus on building assets that generate passive income, and you'll unlock financial independence. We've covered the essentials, the building blocks of financial literacy. We've laid the groundwork, and now it's time to put that knowledge into action. Assets versus liabilities, understanding what brings money in versus what takes money out. It's about building a portfolio of assets that work for you. Good versus bad debt, recognizing the difference between debt that can build wealth and debt that holds you back. Smart debt management is key. Compound interest, the magic of making your money work for you, earning returns on your returns. It's a powerful tool for long-term growth. Budgeting, creating a roadmap for your money, ensuring that your spending aligns with your values and goals. Investing, putting your money to work in assets that can grow over time. Building wealth for the future. Taxes, understanding how they impact your finances and how to minimize your tax burden legally and ethically. And passive income, creating income streams that require minimal effort, allowing you to earn money even while you sleep. But knowledge is useless without action. It's time to take what you've learned and apply it to your own financial life. Your greatest asset is time. Start now, even with small amounts. The sooner you begin, the more time your money has to grow. The habits you build today will shape your future. Small, consistent actions can lead to significant results over time. Don't wait for someone else to teach you. Take charge of your financial education. Your financial future is in your hands. Read books, articles, and blogs from trusted sources. Watch videos and documentaries that explain complex concepts in an easy-to-understand way. Listen and ask questions. Engage with financial experts and seek clarification on anything you don't understand. Make learning about money a lifelong habit. The financial landscape is constantly evolving, so continuous learning is essential. Here's your call to action. 3 simple steps to get you started. This week, track your spending for 7 days. Understand where your money is going. Open a high-yield savings account to make your savings work harder. And set up an automatic transfer. Automate your savings to make it effortless. Spend an hour learning about index funds and Roth IRAs. These are powerful tools for long-term investing. These small steps are the start of your journey. Every journey begins with a single step. You are the CEO of your life. Take charge of your finances, make informed decisions, and steer your financial ship. Build a future of freedom, security, and choice. A future where you have the resources to live life on your own terms. Your future self will thank you. The sacrifices you make today will pay off handsomely in the years to come.